I will break down exactly what's happening behind the scenes and share crucial strategies to protect your home and finances starting today. If you own property or are considering selling, the next 6 to 12 months could significantly impact your financial future. Again, are you ready? If you are concerned at all about the financial future in the next few years coming, don't trust the headlines. I'm sure you have a lot of information, a lot of data that you consume. Social media, news channels like CNN, ABC, MSN, Fox News, all these channels give you headlines, but they're not true headlines. They give you what you want to hear. It's not what you wanted to hear. So be careful what's out there. You have to be real prepared. You have to be careful what you absorb, what you see, and what you believe. News networks are pushing narratives, but the Fed, the market, and real economic data tell a different story today, and it is changing every day. These days, you have to ask from the news stories, who is benefiting from the news stories, you or them? If you have the wrong information or if you interpret the wrong information, you could be in financial trouble based on what you hear and not on what you really understand what those data means. We all know that tariffs is a big thing in the last few months, or it has already impacted you in a significant way. New 25% tariffs on imported goods, cars, appliances, materials, and more are quietly inflating our cost of living daily. Just today as we speak, Dow Jones is down 1,500 points due to the tariff or the Liberation Day that was announced yesterday by the Trump administration. They have levied tariffs throughout the global world, and the global world is impacting, and the Dow Jones is telling us on the reaction. Are you prepared? With higher tariffs imposing on other countries, they are going to impose tariffs on us. They have already imposed. Mexico, Canada, Europe is already doing that, and the prices are already skyrocketing. Home construction is up. Home building is up. Cost of goods is already up. Egg prices are up. Car prices is going to skyrocket because of the 25% tariffs coming on. So it is already impacting your pockets. What are you doing about it? We have an official world trade war in place. And guess what? We are soldiers in it, and we don't even know about it yet. If you are considering remodeling, replacing those appliances, fixing up anything, adding any rooms, etc., guess what? Your prices just went up, and they're not stopping anytime soon. Let's talk about the interest rate. Well, they're not dropping, and it doesn't seem like they're going to drop anytime soon. Trump administration wants the rate to drop. Feds control the interest rates, and on the other hand, they don't want to drop the interest rate. So we have a conflicting agenda, and we are stuck in the middle. The mortgage rates today are still close to 7%, below 7%. The Fed is watching inflation, and the Feds are in no hurry to drop the interest rates. The Federal Reserve doesn't set mortgage rates outright, but its decision do play a role in the percentages lenders offer would-be homeowners. And even if the Fed keeps in benchmark rate unchanged, mortgage rates can still fluctuate. Here's how the Fed's monetary policy affects mortgages and your ability to buy a home. In other words, if the rates stay high, the buyers are having a hard time or are struggling to buy homes. And if they don't buy homes, as sellers, you may not get the price increase that you want. This means that buyers are pausing, sellers may have to adjust pricing, and refis remain unattractive. Sellers need a smart strategy to stand out today to sell their homes. Housing is active, but it seems like it is slowing down, and there is a word recession in the air quite a bit. You must have already heard about it in the news and on social media and from your peers. Comment below how you may be preparing or what your concerns are. Now, this video may sound like I'm talking about doom and gloom, but it's absolutely not so. The fact of the matter is, I'm talking about the facts, and here's a fact. The consumer debt is an all-time high. Consumer debt is exploding, especially for men in their mid-50s. Americans now carry $1.2 trillion in credit card debt with rising delinquencies. Look at the total household debt by the type, and this has to do with residential and households. It covers mortgage, home equity, auto loan, credit cards, student loan, and other consumer debt. Ever since 2023 quarter two, the debt was was around 5 trillion. Now, in quarter 2024, getting closer to 20 trillion. As you can see, it's been going up and up and up and up. And consumers are fed up with high debt, high prices, high inflation, high interest rates. Many in their 40s and 50s are holding more debt than savings. That's dangerous in a shifting market. Let's look at some statistics that's not very pretty. Survey says that 42% of Americans don't have an emergency fund. What if you lose a job? What if there's a medical emergency? What happens? Are you able to survive for 3 more months, 5 months, 6 months without a job or without one of you not working? Let's look at the retirement savings by age, and the numbers don't look good at all. If you look at the average age and retirement, under age 35, the average retirement savings is only $49,000. Ages 35 to 44, the average retirement savings is $141,000. If you're 45 to 55, the average savings is $313,000, and 55 to 65, it's $537,000. Now remember, this is an average. That means a lot of people have very low savings and a lot of people have a very high savings. In other words, most consumers in the middle don't have a whole lot, and that's sad news. So the question is, what are you doing to prepare? Do you have a 3 months emergency fund? Experts recommend that you have at least 6 months in emergency funds. Do you have it? If not, if there's a hard times coming up, should you start saving? I started saving a couple of years ago because in real estate, as you know, the market is going up and up and up for the last 10, 15 years. And I personally know that the market cannot sustain that. So tough times are coming. I was there in 2008 and it was a surprise. I did not have any savings. Luckily, I did not lose my house or my cars like a lot of other realtors and a lot of other people did. But this time, I've already started preparing. I started investing 2 or 3 years ago. I started cutting my debt. And I'm very cautious on what I use and what I spend. Tough times are coming up. And I don't seem to be negative or make this video doom and gloom, but facts are facts. Where do you see the economy going? Do you have savings? Do you have emergency fund? Or what are you doing to start creating an emergency fund? Saving for emergency fund is not fear. It is smart protection for your future and for you and for your family. So I talked about the inflation and the tariffs coming up and the rising of goods and cost of everything. So if you are thinking about remodeling or if you are thinking about selling, what are your plans if the prices go up? Due to the rising cost, upgrades and repairs will only get pricier. That means you'll have to ask for a higher price on your home if you want to sell it. But then buyers may not buy your house. So are you prepared for the turbulent housing market that may be popping up in the next year or so? If you're planning to sell, lock in materials and contractors now. The longer you wait, the more it could cost you and eat into your equity. If you bought a house in the last 3 or 4 years or 5 or 10 years, you have a lot of equity in your home. How can you utilize this? If you look at this chart, it shows that here are some pointers on do's and don'ts for using your home equity. I won't talk much about it, but here's a chart that tells you how you can use your equity to your advantage. In preparation for your future, well-protected future, of course, you can buy stocks and mutual funds and chip away. But one of the other things you could do is if you have a lot of equity and if you feel like buying a property or get ready to buy a property when the prices do drop, when the interest rates could drop, you could use equity. You could refinance, pull some cash out and buy another rental property or income property and grow your net worth and grow your cash flow. Something that you may want to consider. One of the things about equity is that if you're sitting on equity, don't cash out carelessly. Think of equity as a cushion, not a piggy bank that you can pull out and go on a vacation and remodel or buy a boat or buy a horse. It's always a good idea not to over leverage. In 2008 crash, one of the reasons for the recession and the crash was people over leverage. They borrowed and borrowed on their credit card, on their homes, on their equity, on their income property. And soon the prices dropped and they had no equity. They over leveraged. Let's not do that again. At least I'm not planning on doing that. So let's talk about layoffs. Of everything that you can protect, one thing you cannot protect is your job. What if you are laid off? Layoffs are creeping in across tech, media, and even government sectors. Confidence is down And when people are nervous, they stop spending, including on homes. Update your resume, diversify your income, and build a side hustle if you must. We have already seen layoffs from the government. We have seen layoffs in the tech sector. We have seen layoffs from Walmart. And more layoffs seem to be coming, especially when we find out what the true impact of the tariffs are, which started yesterday on what we call the Liberation Day, where everybody was hit globally with tariffs. So let's see what the repercussions will be. We'll visit that in a few months. We have had a great run in the last 10 to 12 years, not only in the stock market, but in every sector of our lives. Look, this is not about panic. It's about preparation. Whether you're selling, investing, or just trying to stay afloat, the homeowners who act now, cutting debt, boosting savings, watching cost, and staying informed will be the ones who come out strong ahead and faster. You don't need to be perfect. You need to be informed and you need to be proactive. I did a video a few weeks ago. Trump's housing plan will change everything now. Are you ready? Please take a moment and watch it. If you like this video, please share or subscribe. I really appreciate it. Sell smart, gain more.